Welcome back, folks. It's time for Rebel's Edge. And apparently, it's also time for a civilization of bears to go to sleep. And we'll be telling you all about that in just a minute on today's Rebel's Edge. Yeah, those bears aren't dead, folks, but they're sleeping. They might be hibernating for a bit because the market's screaming up. Basically, the Dow Jones Industrials, the Nasdaq, and the S&P all zooming to the upside. And Pete and I are going to break it down for you, right, Pete?
That's what we're going to do, and I'll throw one more in there. How about the Russell up 3% today? Wow. Not bad.
Well, Pakistan gets together with Iran, with the mullahs. I don't even know who you call there anymore, because as soon as they name somebody, Israel kills them. So in other words, it's got the lifespan of a mayfly, Pete, which is 24 hours. I looked that up. But anyway, Pakistan reached out to Iran and said, guys, he's going to do it. You got to do something. And so they said, okay, 2 weeks. We'll open the Strait of Hormuz for 2 weeks. And Trump said, okay, if you do that, then I won't bomb you for 2 weeks. But after that, we better have a deal. Anyway, folks, welcome back, of course. Rebel's Edge, delighted to have you with us. Always fun when the market's moving like this.
Yeah.
And my brother Pete Nigerian's going to break down some beyond just the idea that the 2-week ceasefire caused markets around the world, Pete, to rally pretty significantly. And like you said, we got an excess of a 3% rally out of the Russell, the small cap. So pretty big deal.
Yeah, a huge deal, John. And from that macro sense, I'll just jump right to the volatility index, which we actually did dip underneath 20 for about a quarter of a second, maybe, but nonetheless, we did. And interesting to see, just exactly like you would probably have expected, John, if we got something like this and an agreement at least for this 2 weeks. And so, it's important. And I look over at the VIX, and like I said, got underneath 20 for a moment, and kind of hanging around somewhere, call it around 21, a little bit north of that, a little bit south of that, but call it 21. And that's significant because we were just talking about that most recent sort of move to the upside as people were getting more and more nervous about things. But some of those nerves, I think, are getting settled a little bit, John, because we're seeing that huge turn in the markets and everybody flipping and looking at what's going on with crude oil, which I know we're going to talk about. But when you look at what WTI did from last night to where it is now, I would say that that's very meaningful.
Yep, and it's going to affect a whole bunch of industries, just as it was negative, folks. We recognize that. It's certainly negative when crude oil goes rocketing up to 117, and it feels a heck of a lot better, Pete, as it comes down back into the 90s. And I will say that on the prediction exchanges, Pete, it's actually the majority of money right now is betting that it goes into the 80s,
wow,
rather than through 120. And that's just very, very recent. So we'll get a chance to talk about that maybe tomorrow, Pete. But let's talk about prediction. And my prediction is the same as Mr. T's, Pete. What I'm predicting right now is pain. If you remember when Mr. T did that for Rocky, predicting pain, that is, because we have right now a lot of pain being dealt to the bears in the markets. That's why we started with those bears sleeping. At first, I asked Grok to make me dead bears, a cartoon of dead bears, and Grok wouldn't do it. Grok said, I can't do that. It's no, I won't do that. So it did a cartoon of sleeping bears. But certainly those bears are sleeping right now, and they're probably wishing they took their profits when they had them, because 68.78 was where we were before the war started, Pete. February 27th. Look it up, folks. Where are we now? we're basically this close to being flat since the war began, Pete, which is pretty amazing. So, within 1% of us being flat, given how much volatility and how many bombs and all the rest, how many ships have been sunk and so forth. As Hegseth said, we made a deal with Iran. We'll take the above the surface of the ocean and we'll give them below the surface of the ocean.
He is something else.
But anyway, oh yeah. Well, let's dive in, Pete, to the airlines, because they are certainly one of the sectors, folks, that is most impacted. We told you at the beginning of this conflict that 25 to 30% of the airlines' costs are fuel. Obviously, employees are the next biggest part, but fuel, employees, and then, of course, the leases for the jets, since most of them are leasing them rather than owning them these days. But man, you look at Delta, United, American, Southwest, JetBlue, and so forth, and you're seeing rallies, Pete, across the board on all of those. And as you might imagine, we have at least one bit of unusual activity to sort of pat ourselves on the back for, and that would be Delta. Take a look at those two guys. On the 9th of March, well, they were buying the 65 calls in April that expire on the 17th. So that's not this week, that's next week. What did they also buy on the 19th? Well, they bought the April 70 calls with the stock at 65 bucks. So obviously the first one hit with the stock at 58 roughly, second one hit with the stock at 65, and then boom, to the upside today. So another opportunity for those of you who follow our unusual option activity to cash in. Do exercise your discipline, folks, because that's something Pete and I think is so important, is that you have to exercise discipline.
Yeah, I mean, what are you waiting for? You're looking for that move, and they got that move. So fantastic for anybody who was able to catch this one, John. It was an unbelievably good quarter for them, but there was a little bit of the expectations fell short probably for Q2, but that doesn't seem to be bothering Delta's stock at all. As a matter of fact, like you were just talking about, all these airlines, nice moves to the upside. We know why they were getting beat up. We also know the costs that was going to be a big issue, and yet that this past quarter it was fine. But going forward, they still have a little bit of nervousness, and that's why their guidance is a little bit weaker than people were looking for. It's an amazing thing. Let's not forget, this is one of those that there's a refinery operations as well, which makes Delta pretty interesting, I think, John. So for that reason, when we see that UOA, Delta's one that you and I usually seem to want to jump on. Every once in a while, we'll see JetBlue, and those are opportunities as well. It's the movement sometimes out of JetBlue that's just not quite as aggressive as when you see something like a Delta or a United or whomever. So the airlines across the board, as you were just saying, though, John, all of them getting a really, really nice boost on this as we're watching WTI come down. And obviously that's going to affect everything from diesel to you name it, air fuel as well. So not surprised at all that they had a good quarter, though. They were able to pass on some of those numbers, John. When you look at that, and I looked at the cost of a lot of the trips that I've made, and I'm sure you've made as well, where you're looking at that cost, and they've been sort of passing that over to us. So it's understandable that they had a pretty daggone strong quarter.
Well, and then the next part of the refined process, folks, for many of us that we keep our eyes on is diesel and fuel oil. And what do those power? Well, cruise ships and trucks. And so you'd imagine that you'd see nice rallies out of cruise lines and trucking. And we're seeing exactly that, in fact, Pete, exactly strong activity in the cruise lines, very strong upside activity in Norwegian cruise lines, Carnival Cruise Lines, CCL, in Royal Caribbean Cruise Lines, and a lot of the travel sites, Pete, because people are looking again for, okay, where can I find a good deal to go on my trip to either Europe, maybe down here to Puerto Rico or whatever. Well, there's opportunities there. And certainly people that followed us into any of those unusual activities in the past are pretty happy about it today, Pete.
Yeah, there's no doubt. And as you mentioned, John, and I think it's important, it's not just the cruise lines themselves. It's pretty much anything having to do with those kind of experiences, right? I mean, so that's what is really impressive is, on the downside, that's where it gets a little bit disappointing because so many are getting hit. Now, all of a sudden, as we see crude go from WTI at least up from whatever, 115 all the way down to 92 and now floating around somewhere close to 95, 96. Pretty substantial. And even Brent crude, obviously makes their decline as well. So it gives you a lot more visibility in terms of what the fuel costs are at least going to be for now. We'll have to keep a close eye on this whole thing. But at least for now, John, that's a really good thing and something that you're seeing the great reward that we're getting from some of those unusual options that we've seen. And a lot more of that really going into the cruise ships. We see CCL, Carnival Cruise, a lot. We see Norwegian a fair amount. So we see those. We see a little bit less of some of those in the experience side trip and some of the others, but they're influenced by that as well, obviously, because if people aren't going on those cruises or those flights or whatever, that is hurting those names. And people are going to be going, I think the expectation with this whole deal coming for at least the next couple of weeks and that price coming down for oil.
Well, then we've got energy itself, Pete.
Yeah.
The companies that had it, for instance, ExxonMobil, Chevron, whether it's domestic or whether it's foreign, those guys benefited from the price shooting up so much. Well, as you might imagine, the converse of that is they don't do so well when the price of crude comes down $18 a barrel in a single night. But that's what it did. So Venture Global, Occidental, which is a big Buffett holding, Devon Energy, Pete, all of them, EOG, whether it's oil or oil and gas or even NGLs, we're seeing those stocks move to the downside pretty aggressively.
Yeah, getting beat up pretty good, although they've had that great run, and we've all been talking about that as well. When we had that big spike, one of the areas that oftentimes was standing out was energy, and they've had that big move that they've had. Now they're getting that pullback, and I would expect that pullback to continue as long as we've got the price something south of 100, John, for WTI. I think that makes a big deal for people. And, like I said, it dropped from 117 or thereabouts all the way down to 92, 93, and now we find ourselves 95, 96. That's okay. We don't want to see that thing start sprinting to the upside again, unless you're really wanting to get back into some of these energy names. But it's pretty interesting. It's the largest drop, John, that we've had since the Gulf War in 1991 of 20% drop. So significant to see what some of those energy names had been doing and what now that they're doing. And that's one of those things where we knew that was going to happen if we could get any kind of an agreement. This is only a 2-weeker right now, so we'll be watching this pretty closely. But those names definitely taking a little bit of a hit after some of the big runs that they've had to the upside with the price of crude.
Well, let's wind it up, Pete, with AEHR, because it's up bigly, as the president would say. They're basically, and it's right in the name, AHER, Air Test Systems. What do? Well, they test semiconductors and the burn-in on the either wafer level or package level for semiconductor devices. And who is using or in high demand for semiconductor devices these days, Pete? AI data centers. So these guys reported quarterly bookings that were through the roof, a lot bigger than they've reported in the past. Their so-called book to bill well above 3.5x. So orders are significantly outpacing the revenue right now, but the revenue's coming in, Pete, and it's going to be a lot of revenue for these guys.
Yeah, big move, 20% move to the upside, John. I mean, that's pretty spectacular. 15% of the shares were short. So that's part of the squeeze factor, and that's why it's 20%. It probably would be closer to 12 or something like that percent to the upside, but that squeeze adds to it. By the way, I took a look at the 1-year chart of this thing, John. It's only 790%. I mean, so these guys are definitely in the right place, and they're doing an unbelievable job. You talked about the bookings. We could also talk about the backlog, which is also very strong, and the fact that they're in the right place, right? Even when things are all negative, we talk about this a lot, but there's still a robust demand that comes for AI, for the data centers, the infrastructure, and all the rest of the things that go with it. And so for that reason, this is a stock that's not only been running to the upside, but extending that run to the upside. And it's a daggone unbelievable chart. I encourage people to take a look at this name because a lot of us probably don't know it all that well, but we're going to get to know it because these guys are absolutely on fire.
Yep, I like it. And in fact, if you think data centers are still not going to get built out, folks, then I got a bridge I'd like to sell you because they are going to get built out, and they are going to have energy. Of course, we've talked about that, Bloom Energy and Plug Power and a whole bunch of others, Constellation, but that's going to be a big story throughout the next couple of years, not just this year. Yeah. All right, Pete, let's take a look at a little Bears action. Since we started the show with Bears, we're going to give you a little Bears sports because one Chicago Bears, Bears, are definitely out there doing a lot of heavy lifting right now. And that heavy lifting, I think, will really pay off. We, of course, hope that players don't get hurt. But if the Bears stay healthy here, Pete, I think they might be the NFC team this year. I think they're going to be better than Seattle. So let's take a look at our Chicago Bears and what they've been doing in the last 48 hours.
Yeah. Chicago just came storming through free agency and the trade market, and this roster got nasty in a hurry. Start with Garrett Bradbury. The Bears saw Drew Dahlman retire, flipped a fifth-rounder, and snatched a veteran center from New England. That offensive line got tougher, smarter, and way more stable for Caleb Williams. Not done. Kobe Bryant is in the building. 3 years, $40 million, a chess piece safety with range, swagger, and playmaking juice. That secondary just got sharper. And then Devin Bush, 3 years, $30 million, speed in the middle, violence to the football, and $21 million guaranteed. Chicago wanted more burst on defense, and they got it. Still not done. Neville Gallimore brings size and power to the defensive front, while Khalif Raymond gives this offense speed and return game electricity. And don't forget Jedrick Will's future. Plus, Braxton Jones stayed put. That line got real depth. Y'all, the Bears didn't just add pieces. They attacked the offseason. Chicago got faster, meaner, deeper. And if this group clicks, the NFC better watch out because Caleb and Ben Johnson are ready to cook now. Chicago just came.
Ain't that the truth? Now, I'll tell you what, John, Ben, that's great. And you know what? Ben Johnson and what they've been able to do offensively and even build upon the defense. The defense had a couple of holes. They're starting to fill those holes pretty damn quick. They had a hole in the offensive line. They addressed it immediately. And they decided to make a great move, I think, with Bradbury because he was with the Vikings, John, for a very long time, went to New England for a cup of coffee last year, and now he's going with the Bears. He knows the division. He knows the Vikings, obviously. And so he's going to be somebody I think that is going to be meaningful. And you know what? The one sad thing about this whole thing is some of these players, they are retiring earlier and earlier, John, because A, they're getting paid, but B, the concern over some of the stuff going on with CTE and, all those types of things. So I'm glad that a guy is able to step away after a few years, but what was he, 26 years old, I think, the center that decided to walk away. We're seeing more and more of that. But I think across the board, I don't need to go over all those names again, but this is a Chicago Bears team that was 11-6 last year. Their defense led everybody in turnovers. They need a little bit of strength on the defensive line, and they signed it and got it. And by the way, still got the draft. Still got the draft. Right. Not too many days away at this point in time. And if they're 11-6 last year, and you take a look at that, and you look around and everybody else, you're right, John. They could be a Seattle type team, which moves me to my next one for you. Who else could be a Seattle type team? Well, maybe the Los Angeles Raiders. I mean, look at the pieces that they've put together. And the reason
why are you calling them the Los Angeles Raiders, Pete?
Oh, that's real. Oh, Jesus. Nevada, Las Vegas, my God. You know what? That was one of the things that I was going to say too, John. They were in LA. Well, they were in Oakland. Then they went to LA. Then they go to Oakland. Then they go to Las Vegas and blah, 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 blah. And so here they are. I'm impressed with one thing that they just did. And the fact that they were able to get Kirk Cousins, who, like him or hate him, doesn't really matter. He's a guy who's a veteran. He's a guy who's seen it all and been everywhere, it seems like, right? I mean, he was at the Vikings. He was at Washington. He was down there in Atlanta. And he's been one of the highest paid quarterbacks in the league for a long time when you really look at it all. Here's the beautiful thing for the Raiders. The Raiders don't have to give him the $20 million that he's supposed to be getting. They're giving him $11.3 million of that, and Atlanta's paying the rest, the $8.7 million missing. And so they're picking this guy up for, pennies, let's just say. We already know it's going to be Fernando Mendoza, right? I mean, he's going to go there. But now he's got a guy who he can actually learn from. And you know what? I used to think it was crazy, but I don't think anymore. I think it's not such a bad thing for a guy to be able to learn from a veteran like that. And is Kirk a good guy? I think that he is. Everything I ever saw here in Minnesota, he seems like he's a fantastic guy, fantastic friend and player and all the rest of it. So if he can learn some stuff from him, and they put together the new center and the new linebackers and the new defensive tackle and the new kicker and everything else that they've done. And how about the running back position, John? Not so bad. They've got the Heisman Trophy winner over there still with them from the previous year. So I'm looking at the Las Vegas Raiders as they could be truly the Seattle. And the reason they'd be the Seattle is the Bears were good last year. They were already 11-6. There's a reason that the Raiders are picking first. They stunk, right? They were
the worst.
They were the worst. So with that, you know what? Seattle made a big turn. New England made a pretty damn big turn as well. I think that this is the year for the Raiders to make the big turn. I like the coach. I like what they've done with some of the players. And you know what? The fact that Max Crosby is back is actually really good for the Raiders. So it's going to be I think it's going to be interesting. What do you think about that? Can the Raiders be actually that good in this short period of time?
Absolutely they can, because they didn't just sit there and, like you've said many times, they didn't just draft a quarterback number one and then let him get the crap kicked out of him behind a, less than exceptional offensive line. I won't call them crap. They're professionals. They're trying their best. And these guys, no matter what you think, folks, every player in pro football is probably better than almost every player in college football at their same position. But obviously, it's a whole offensive line. It's 5 players there, the center, 2 guards, 2 tackles, and then you throw in the tight ends, the slot back, the running back, and so forth. I mean, so there are reasons that teams struggle. And it's not because the whole team sucks, because they don't. I guarantee you the last guy people want to line up against is probably Max Crosby. Von Miller is also a great player, and Pete and I are going to be out there in Vegas with Max Crosby and Von Miller at their pass rush camp. We've been invited to come on out. We're going to do that. It's going to be fabulous. We'll have some special Rebels Edge material out of it. But I guarantee, Pete, there isn't a tackle in this league that looks forward to being against Max Crosby, because the guy's got that long body. He's fast. He uses his hands, and he either dives inside or gives you the head slap and goes around to the outside. I know he can't hit the helmet, folks, but, he gives that slap and he goes around him to the outside. That is a hell of a player. And now you have an offense with some receivers, a Heisman Trophy running back, and a Heisman Trophy quarterback, as well as Kirk Cousins in there. I got to say, Pete, they look pretty damn good as a shot to get into the playoffs and go deep into the playoffs, especially with Tom Brady in there firing that group up.
Yep, and I think Tom's done a lot of things in a very smart way, because I know he's very involved in it, John. That was part of the reason that he wanted to be in that spot where he had a small percentage, but he has a lot to say. The one thing I will say before we go is I got to work on my swim move. I'm going to be working on that, John, as we get out there for that pass.
Yeah, we'll have to see if Pete and I put on the pads out there with those guys. I won't.
Me neither.
I got one swim move, Pete, and it's only with my right arm. It's not with the left anymore, because this one's shot.
It's going to be fun.
Thanks for joining us, folks. We always appreciate you. We hope you get a lot out of the show. We try to have a little fun and give you guys a lot of insights into some of the stocks that we're following and trading. And we would emphasize for all of you the same thing we would emphasize for our subscribers and our clients for either coaching or mentoring, and that is keep your discipline. If you were fortunate enough to be short some of those energy names and we see an $18 drop in crude, don't be a pig. If you were fortunate enough to be long NVIDIA or Delta Airlines or any of the cruise lines and so forth, don't be a pig. Take a little off the table. We can't pull the trigger for you, but we can tell you from a combined between us 70 years of trading experience, you got to be disciplined about profits and losses.
Yep.
By the way, we'll be teaching that 23rd and 24th in Chicago at SIBO Global Markets, Pete. So, Jared, when you get a chance, please insert that link. Couple seats left, lots of virtual seats, of course. We can virtually do almost anything. So make sure that you guys sign up. You'd get a lot out of it. And I guarantee you'll be a better trader for attending with us. And with that, Pete, we'll see him tomorrow at
1 p.m. Eastern time.
That's it. 1 p.m. Eastern time. Bang.
How fun is it going to be that trip to Chicago for everybody to be able to get to Chicago and actually go to the trading floors and see how it actually works and all the rest of that? And that's something that I think it's April 22nd to the 24th, something like that.
Yep, the VIP party starts 22nd, but the actual in-person on the floor, and there's still a couple seats left, they tell me, folks, 23rd and 24th of April, SIBO Global Markets in Chicago. You can go virtually or you can come in person. I recommend the in person because to see that floor while it's still there is special. So if you're somebody who's trading right now and you'd like to see what it's like down on the floor, by all means, this is a can't miss event.
Yeah. Such a cool area. It's such a fun, so much this nostalgia and everything else. I mean, that place is fantastic. I love it. Still, I miss it. I miss it still to this day.